try to pay attention then when we start lifting prices.
Sponsored by Interactive Brokers. It is Monday, December 23rd, and we are live from the Investors Business Daily Studios in Los Angeles. On today's show, we're going to be talking about 3 stocks. We're going to start with JD.com, move on over to ServiceNow, and then finish off with Disney. It's Justin Nielsen, joined with Ed Carson. What was your name again? Yeah. So, joining me is Ed Carson. With me is Ed Carson, and he is going to talk about the markets. It was another up day in the markets. Looks like the Nasdaq was off of its highs, but still up 0.2%. S&P 500 up just 0.1%. Dow was kind of the outperformer today with a 0.3% gain, and the Russell was about flat. So. Just another up day. It seems like that's what the market does right now.
That seems like what it does. I mean, the Dow was up 0.3 because Boeing rallied after its CEO was ousted, which probably was a necessary situation just to get the FAA to clear the 737 for flight. But so Boeing rose. It's the biggest weight in the Dow. The Nasdaq Composite hit a new high once again, continuing to do well. You can sort of see it's well above its 50-day moving average. That's sort of like the reddish line there. Mm-hmm. You could argue that we could easily go sideways or have a pullback. I think that's something to keep in mind. If you get any breakouts in this situation, there's going to be low volume in most cases, and it just, there's just a good chance that the market could settle sideways sooner or later. So just keep that in mind. But everything's going well. There's no real danger signs.
The only danger sign is how extended things are looking.
Yeah, that's exactly
a little bit of a pullback wouldn't be unusual here, or at least a pause at this point.
Exactly.
But of course, everyone's talking now about the Santa Claus rally. We've got that, potential, and who knows? All of this end of the year. We're kind of talking a little bit about the tax, what people might be doing for taxes with such big gains. Are they going to kind of wait until the end of the year or the beginning of the next year so that they kind of push off some of those gains? A lot of things that they could be doing.
Yeah.
So, okay, let's go ahead and start getting into some stocks. So, JD.com, this is one of the Chinese stocks, and a lot of its group mates have been doing very well, and JD.com looks like it's participating today.
Yeah, JD.com broke out past a sort of a flat base. It was sort of like 1 day short and tried to break out on Friday, closed below it. So it's still like a 35.53 buy point, still fairly valid, got above that. If you look at the purple line down below, that's the relative strength line. I believe that hit a 16-month high that shows it reflects the stock's outperformance versus the S&P 500. It had tried to break out about a month ago, then reversed lower after earnings. But it found support at the 50-day, has moved back higher. As you were saying, some group mates, Alibaba is well extended now. Pinduoduo, which had a bad crash, that one is trying to recover, and ZTO Express is moving up toward a buy point. But the news on JD.com today was that its logistics arm may be looking to file for an IPO overseas in Hong Kong or the U.S. for late 2020. And JD has a majority stake still in that logistics, JD Logistics. So.
Right. Okay. Very good. And kind of moving over to software, ServiceNow. This is one that we've been watching for a little while. It's one that's on leaderboard. And tell me a little bit about what's going on with that. It looked like it was trying to break out today, but couldn't quite hold on to.
Yeah, there's a lot of that. I mean, so software in general seemed to start off okay and then sort of fizzle a little bit. JD was sort of unusual in that it had higher volume, not tremendous volume.
But above average.
But above average, and it had above average volume on Friday. But ServiceNow here just wasn't that great a volume. And it was like, so, which isn't the worst thing. I mean, breakouts now are tricky. How do you judge volume? I mean, if the volume isn't great, do you sort of like excuse it because there isn't, because people are leaving for the holidays?
And tomorrow's going to be a half day. So
tomorrow's going to be a half day, and who's going to be back to work after Christmas? Another thing is that the relative strength line for ServiceNow it isn't even at the handle high, let alone the consolidation high. And this is a problem with a lot of software names that haven't already come back, and most of them haven't. Maybe if they have a powerful breakout, or maybe if the market goes sideways or pulls back, that's an upside to a market pullback. If that could happen, and then some other names could come up, then the relative strength lines will start looking better. But it's just hard to. It doesn't look like a super leader right now.
Right. Now, granted, a lot of times when we're talking about that relative strength line, we are wanting to see it kind of lead the stock into new high price. It is still not at new price highs, so it does have some room for that relative strength to kind of still surge, but it has been basing since July, and especially when the market's been so strong, it's one of those where if you didn't participate already, you're going to have a lagging relative strength. So it's almost like, okay, are you an also ran at this point, or why weren't you here earlier?
Sometimes you don't want to be in a laggard in a leading group, and you don't necessarily want to be a leader in a lagging group.
Right.
I mean, so like
kind of like the house. You don't want to have the most expensive house on the block.
Exactly.
Right? But in this case, you want the best one.
That's right.
For our purposes. And of course, this is one where the 200-day moving average line is still above the 50-day moving average line. And again, that just has to do with that consolidation that was happening in a lot of names in the software industry.
Yeah.
So now let's go ahead and move over to a big cap, Walt Disney Company. Now, we were kind of talking about this, Allie and I had our lightsabers out last week. Rise of Skywalker, that came out, and it was one of those things where how is this going to be received by fans? How was it going to be received by critics? And more importantly, what was it going to do to the bottom line for Disney? So what was happening with Disney?
Well, I mean, the film got $175.5 million in box office over the 3-day weekend. That doesn't include the previews from Thursday. That was less than expected. I mean, based generally, though, it was above Disney's conservative estimate. A lot of those sales were on Friday, so it trailed off. It just it was well below what The Force Awakens was and The Last Jedi. So maybe some concerns that the franchise is a little weaker in that regard. China was especially weak, and so you don't want to see Star Wars not be big in the sort of the biggest market outside the U.S. I mean, we don't want to go too crazy here, but Disney sort of broke out on Disney Plus numbers back on November 13th, and ever since then it sort of rallied a little bit above that, but for several weeks it's been right around the buy point. It's losing some ground versus the buy point, but nothing radical. Actually, on a weekly chart, it's finding support right around the 10-week line. It's got more room to go before it hits the 50-day line. Usually there's not that much divergence.
Yeah.
But maybe that spike up cause a little bit of
right.
screwing around for a little bit longer. You don't want to make too much of it, but at the same time, it isn't really moving that great either. It's sort of in between.
Yeah, you'd almost, especially with such a strong market, you'd almost want to see it follow up on that strength, and it just hasn't done that yet. Now, as you mentioned, it is kind of getting support at that prior buy area, but again, it's just not kind of doing the follow-up move that we would have liked to see.
Yeah.
Okay, that'll do it for us today. Don't forget, tomorrow is going to be a short day, a half day in the market for Christmas Eve. Also, we will still be live on IBD Live tomorrow morning. Are you going to be on tomorrow?
I'm going to be on tomorrow. So we're basically going to be video all through the trading day.
Right, exactly. We're going to basically do that in the morning, and then start thinking about what we're going to do for the afternoon or morning in this case. So do catch us on IBD Live. You can watch that at investors.com/IBD Live for a free trial, and check that out. We will go through the trading early hours and kind of see what's setting up, and talk a little bit about some lessons. And there's 4 of us on generally, and some Q&A too. So we got through a lot of those questions today. I think over 80. Also, don't forget, you can also follow us on social media. We are on Facebook, on Twitter, YouTube, and Instagram. And that's a great way to connect with any of us and kind of follow along with what's happening at Investors Business Daily. But for today, we are done. We will see you back here tomorrow. Thanks for watching.